Canada's oil-dependent economy is in trouble. Once there was talk of being an energy superpower, thanks to the rich bitumen deposits of northern Alberta. Now lower oil prices have vastly lowered expectations. China's financial turmoil has also come calling. Last week, Toronto's stock exchange had record losses before partially recovering. It's all shaken confidence in a country that was proud it came through the 2008 international banking crisis relatively unscathed. The most visible effect of all that global turmoil, downward pressure on the country's currency. This is $20 Canadian in $1 coins, and in 2013, it was the same as $20 US. But these days, just a year and a half on, you've got to add another $5 Canadian to get yourself 20 US dollars. It's not all gloom and doom. A lower Canadian dollar and buoyant US economy have boosted manufacturing and exports, though not enough to offset low oil prices.
75% of the Canadian economy, for example, geographically is actually still growing at a pretty solid pace because they're not actually producing oil. Provinces like Alberta, though, where oil production is a good quarter of the economy directly, you're looking at negative growth, if not outright recession.
Yet perceptions matter across the country. The economy is the major issue in the campaign for October's federal election. The governing Conservatives say troubled times call for stability for their re-election. Opposition parties promise to turn things around with a better plan. Analysts wonder if that's even possible in a globalized world.
No party has a lock on the issue of managing the economy. The underlying reality is that the governments don't really determine the success or failure of the economy, only at the edges. But they try to convey the impression that they do.
As the local election campaign continues, Canadian politicians might be well advised to pay as much attention to world markets as to opinion polls at home. Daniel Lack, Al Jazeera, Toronto.